Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what we think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe. Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, guys, check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out. Let's jump right down into this video and talk about the recent moves for Bitcoin, what this might mean for the future price action of BTC as well. So we'll be taking a look at the hourly chart here today. And if we get a chance, we'll probably take a look at some of those larger views as well on the kind of the dailies. But let's take a look at this hourly view to start with, right? So here we have smart money concepts. Smart money concepts essentially is giving us an idea as to kind of whether or not smart money has entered the market or coming out of the market. We can see that on this hourly chart, we've been kind of getting a few false flags recently. We can see that we had a false flag here for change from bearish to bullish. And then we have a change down here from bullish to bearish. And then we have another one here from bearish to bullish again, right? So we're bouncing around a little bit. This isn't terribly too unusual in the way that we think that there's a fair amount of manipulation going on, pushing the price of Bitcoin up into some areas for liquidations. Essentially, we use the word manipulation. It's probably a bit of a farce, to be honest with you, because essentially it's quite easy to kind of blame things on manipulation. But realistically, really what we're talking about here is liquidity grabbing, and basically the price being pushed towards the liquidity, i.e. we can liquidate short positions if price goes to this number, and vice versa, right? If price comes down, they can liquidate those long positions. It's all about grabbing as much money as possible. At least it does appear to be that way when it comes to the smart funds in the current structures and the current market that we find ourselves in at the moment. So it's not terribly too unusual that we saw a move for Bitcoin into this range yesterday. I posted this on Twitter yesterday morning, so around the 29th of May, around kind of 9-10 o'clock in the morning when we're up here. And I was saying, you know, is it likely that we're going to move down to these fair value gaps, right? And this fair value gap is basically created from the smart fund pushing the price of Bitcoin upwards, right? And so this was 27,593 to 27,835. And it's no coincidence that you find us coming down, testing the 50 EMA, filling out the fair value gap, and now moving up. And you can see here that we're coming up into this red area. This is an internal sell order block. So chances are that we find this as our rejection as we head up into our overbought range here as well on the stochastic RSIs. So stochastic RSI overbought, resistance up here in the sell order blocks, and we have filled out the first fair value gap down here at this area between 27.5 and 27.8. So what's next? Well, there's a small little slither down here of a fair value gap, and we can quite comfortably come down and grab this. I didn't mark it up like I did this lower one, just simply because it is a real small little area here. This is basically 27,400 to 27,470, right? So we can see it right in that little range. It's a very, very fine, small gap there. And so chances are we're going to have to move on down. Equilibrium sits down here, okay? And this particular area is also on top of a buy order block. This is 27,096 through to actually equilibrium being 27,219. So equilibrium is right an interesting spot for us. It also happens to fall in line with our 200 EMA. Our 200 EMA currently sitting at $27,169. And so I think if we're going to see a move to the downside here, we're going to have to lose the 50 EMA as support and come down towards our equilibrium. Now, if we were to lose equilibrium, that's really where that second fair value gap that I have highlighted comes into play, $26,895 to $27,070. So for now, it doesn't look like there's a huge requirement to do this, but something that we should be aware of, that we are probably going to be moving down. If we have, of course, topped out already, you can see that our 1 to 1.236 would essentially just fall in line with the fair value gap and equilibrium right down here. I'm just going to throw that extra little box on there so you can kind of see. This is 26,921 to 27,132. Now, this particular level is of interest because it would basically allow us to look at this as a corrective structure coming down in a three-wave pattern right into that range. Gets us right into that next fair value gap and gets us a little bit past the equilibrium. It could just be a wick down here and a close above the 200 EMA. That would be enough to kind of say, okay, we've done a correction and we can now start to be a little bit more bullish on the market. So we are looking for a move to the downside before we can start thinking about that next move to the upside. The obvious thing here, specifically if we start blending Elliott wave theory with the smart money concepts, is that this would basically be an idea that we have a big move to the upside to occur. So this next retracement might be a fantastic DCA kind of purchase swing trade opportunity area. Okay, so I'm going to take this, I'm just going to put it on the higher range, okay, at the 27,133 approximately, and then this is going to show us with a potential move coming right up into this higher range. Okay, so short-term bullish, slightly longer term or medium term on the short-term bearish, as in we come down to equilibrium, and then we have a medium-term bullish move here, which could see us up 29,800 to 30,500. And this would basically be an A, B, C structure like this. And you can see how this is an area that we've been talking about for a while, because we were expecting to test that kind of $28,000 to $29,000. Can, of course, push up to the 30,500, not a problem, but I'm not expecting it to go higher than 31,000. And this would actually fall quite nicely in that idea of seeing this move to the upside. Now, the interesting thing about this is we are going to find ourselves with all this upper resistance right at around $29,000 in that $29,000 to $30,000 range, right? We can see that right in there. So that's going to be an interesting spot. You can see the red sell order blocks in the same way that we can see over here. But a move to the upside would be pretty interesting and welcomed, I think, in the space overall. We do need to see that little push to the upside, in my opinion, before we can start talking about those corrections back to the downside. So for the most part, everything here is actually looking quite reasonable on BTC. It's looking pretty reasonable to have those kind of expectations and those moves to the downside. So ultimately, I'm thinking here, if we have already topped out, it would work quite nicely for the 26,895 to 27,070 range, which would be our B wave structure. And then, of course, we'll be starting to talk about 2930K BTC on the next kind of move to the upside. So short-term move to the downside with a slightly longer-term move going upwards towards that $30,000, which will be pretty decent. This is also reasonably aligned to our structures within Elliott wave theory, making the assumption that actually this is now just a corrective three-wave structure, and this move to the upside. Now, the interesting things with what potentially would happen after would mean that we might see this as a really big diagonal. So it's always something to be cautious of, and that would be very, very bearish on a long-term view. But if we think of this as just a zigzag pattern, well, we can then return to those bullish times. I'm not saying 5,000% gains are something that we're likely to see, because I think that's incredibly unlikely. I think that's just pure hopium and clickbaitiness. I think essentially, realistically speaking, if we're to go into the next bullish market, we first of all need to see the Fed pivot, and when the Fed pivot, we need to go down, as in there's always a crash in the stock market when the Fed pivot. So we'd expect to see a nice healthy retracement on the news that the Fed have pivoted. I mean, I'm not expecting them to do that anytime soon either. So for now, we might have this little move to the upside. We might tap into that $30,000 range, but essentially we are still expecting further downside, more towards the $20,000. I feel we have to lose that $20,000 level in order to fill those fair value gaps on those larger time frames, which if I bring up into our daily time frame here, you can kind of see this kind of idea that we have these fair value gaps and equilibrium sat down more towards these levels. So a push to the upside is fine. It's perfectly acceptable to see. But essentially, I am looking for this move to the downside to kind of help us a little bit. Okay, and I think that's going to help us longer term, because we can't continue these ideas of just consistently moving upwards. You do have to appreciate the fact that nice healthy corrections have to occur. So right now, yeah, we have that potential where we might be able to tap into some of these slightly higher ranges, right up into that kind of, as on this daily chart, you can see that we're tapped right into that sell order block at the moment, just up here. Okay, and obviously all these green areas are the fair value gaps that we're looking to kind of get filled out. Okay, so we are looking to move this price action more towards equilibrium in my opinion, but we do have to lose the daily 200 EMA. Now we're up in this overbought range, which means there is a lot of momentum to shift to the downside at some point. It doesn't have to happen right away, but it does have to happen at some point. point. It doesn't have to also, it's worth noting, that this doesn't reflect price, right? It doesn't mean that you have to have a huge drop in price to bring this all the way down to the oversold area. That's not necessarily what's going to happen here. We could, if we have the right sentiment in the space, just come down, test a 200 EMA and be down in this oversold area, right? That's equally as possible. But some kind of movement to the downside is an inevitability that we need to acknowledge. So we can't just continuously move upwards. We're finding resistance right now. So I do expect us to move down briefly. But it's like I said, we are also looking at maybe testing that higher range once again around 29 to 30K. And once doing that, and once that's completed, then we can start probably talking about maybe the equilibrium on the daily, which will be about 22 to about 23.5. So there's a lot of things to kind of be said there. On our weekly time frame, we got the RSI reasonably high here. Okay, this is not a stochastic, this is just your RSI. Currently sat at about 58. So, we take a look at this thing and I think, yeah, we probably do have some room on our weekly to the downside here. But at the same time, it can also move upwards if it needed to. It's not the be all and end all. Now, if we take a look at the stochastic variation, we can see that we're almost down in the oversold area, not there yet. So a bigger move to the downside on the RSI and stochastic RSI could see us with a pretty healthy correction overall. My big concerns, though, really are coming in on the monthly time frame now. So our monthly time frame was heavily oversold for a very long period of time, and it's moved almost back up to the overbought range. Now, we can be up in overbought for months, right? We can, absolutely. And you can see that here from where we were previously, right? So really, we went up into the overbought range in September of 2020, and we can see great growth in the price action, right? And we were overbought during that time period. Equally, at the same time, though, we can be up here, top out by the time we actually get into overbought, and then just move down again. So wherever we sit, whether we are thinking that we're finally going to reach this plateau of where we were from the 2019 run in June and move to the downside for the Fed pivot, like you see here in 2019 and into 2020, right? We can see that. And then, if that's where we are right now, then we should be expecting a healthy correction. I'm not saying that a new lower low has to happen, but I do suspect something is probably going to, just from the fact that I haven't seen the accumulation at the wealthier levels yet, only seen it really at the retail levels. So until that kind of transfer of wealth occurs from retail to the smart money funds, the institutional funds, I'm kind of saying, optimistically, I'd like us to be in a bullish market with the low being in, but there's no guarantees of that until you really get those signals firing to say that accumulation has occurred at the wealthier side of the spectrum rather than just on the retail side of the spectrum. Ultimately, you can see here we came into our resistance lines. Nothing terribly too unusual there. Previous support becomes resistance. You can see that on the monthly. And the big worry here is that we have some kind of big kind of corrective structure that takes us lower than 10K. We don't want that. It's not what we want to see, but it's a possibility, so we should be very cautious when it comes to BTC at the moment. On our weekly time frame, we have a little bit of hopium, but our daily is looking pretty bearish. We're looking at the resistance and rejection here from our supply zone on the weekly and the monthly. The monthly looking like it's heading up into the overbought range by the time that we close the next monthly candle. Where is that stochastic RSI going to be? It's going to be very, very interesting. I'm going to leave this video right there, though, give you my thoughts and opinions on what I think is likely to happen on BTC. Are we going to be going to get that 30K push that so many people are calling for, or are we going to start breaking down? Let me know what your thoughts are in the comments below. If you found this useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe? And don't forget to join us in Discord, linked in the description below. Until the next one, though, guys, have a fantastic day. We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.